Well, ladies and gentlemen, boys and girls, I'm back just that quick. I'm back in here with the living legend, Larry, who does a bit of investing himself. He wanted to get in on this conversation about everything we just got finished talking about. Living legend, you into tech, and cars nowadays are pretty much tech.
Yeah.
Other than what I've said, because I send you private messages, what are you seeing and hearing about the big news from NIO Day and the EV maker NIO?
I'll tell you, I'm looking forward to hear what you have to say about it because all I know is that my NIO stock jumped up again.
Yeah.
And I know that they made a deal with somebody. I forgot what it was, but they made some. I know they made some partnership with someone that really is helping the stock price move. And I'm not exactly sure what that deal is. So I don't know if you talked about it earlier, but if not, give me a heads up on it because I sold some of my stock. I sold some of it enough to cover my initial investment with them, and I kept the rest. But I think I'm going to pick up some more shares in the morning when the market opens. So,
okay. So I don't have all those beautiful graphics and all the crap because I just trashed them because I didn't expect to be up here. But where there's a will and a black man, there's always a way. And I'm both of those. So let me just click you over here and show you what's been going on. So this weekend was a big weekend, Larry, because NIO revealed that this is going to be their new car of the future to rival Tesla's Model S Plaid. It's the NIO ET7. It's going to be autonomous. And guess who their partner is for this autonomous venture?
now I think I remember. Now I think you mentioned something about NVIDIA.
Oh my God, NVIDIA, yes, man, yes. And the semiconductor chip that they're planning to put in this thing is the most comprehensive, most powerful semiconductor chip the world has ever seen. NIO is trying to go head to head with Tesla, Larry, not only for being a car, but as I was telling people on the last video, you can't think of NIO or Tesla as just car makers because what they're doing, they're refining and patenting renewable energy and how to make it cheap. And this is going to be the car they're going to launch next year, and they're going to start pre-orders in the summertime.
So now, can you buy NIOs in the U.S. or are they strictly in China and other markets?
They're in other markets, but if you're rich enough, you can order one from NIO and they'll fly it here. But that's another cost all to itself. They haven't hit the American market yet, and they still show promising numbers, which is why I think the stock market is so excited about them. And when institutional investors hear about this news, there's just no way this stock is not going to go up a little bit more this week. And so what I was telling people to do with this type of play is, Larry, I was basically telling people do it like this. Look, let me fix the screen. I was telling people you can do this a couple of ways because we know that this thing is going to go up short term at the very least. You can sell a put, which means you need to have what the stock is going for, basically $5,600. You need to have $5,600 in your account. You can sell a put. You could buy a call, which will be cheaper, so that you can capture the gains of 100 shares of stock without having to buy 100 shares. But if you believe in NIO and Tesla the way I do, and you believe in both those companies as being more than just car manufacturers, but rebel rousers, the future of renewable energy, you can go ahead and buy the stock, hold it long term. If it doubles, then you cut back some of your shares and reinvest somewhere else. That's what I was telling people they can do with NIO. Those are three great strategies. Those are win-win strategies. And Larry, what questions you got about NIO and what they're about to do?
Well, one thing I want to know is that now if they are partnering with NVIDIA,
yep,
that screen that's inside, are we going to get an NVIDIA Shield built into the car? So
one of the things, and look, this is the other thing I was telling people that they do. NIO doesn't just do cars, Larry. NIO also does solar. They do buildings and all the material that they don't use for making a car. They take it and make clothes. They make furniture. They're already a diverse corporation. All this stuff is made from the materials that come from NIO's cars. Look at this, Larry. You see this?
Let me see. Put it up on the screen.
Oh, my bad. I thought the screen was still sharing. My bad. Oops. Let me go back to it.
So NIO, they are what charging are they? Well, I guess they're not here in the US, so it doesn't really matter for me in that sense. But I'm wondering what charging system they're on. Are they going to be on like a Tesla supercharged system, or what other chargings are they going to be on? The I don't know what are some of the other charging systems that are out there, but
man, you missed it, man. They do their own charging system, and another exciting thing that they're doing. And let me see if I can find the picture up here. They've got it where you can drive your car into a station. It'll jack your car up, take your battery out, and replace it with a full battery. You're in and you're out in 2 minutes.
2 minutes.
2 minutes, Larry. And they've been putting these charging stations, they've been putting those battery replacement stations up next to Tesla charging stations.
Wow.
Yeah, man.
Yeah, that's nice. If you can actually get in and get out in just a matter of a few minutes and have a fully charged battery.
Man, and I had the video, but I don't have it now. Like I said, but when we get off, go back and check the live I just did. The video is up there. They go through the whole thing. It literally takes 2 minutes. And this new car, Larry, is going to already have a 100 kilowatt pack battery in it, and that's going to get you some 500 miles, something like that. 0 to 60, Larry, in about 2 seconds.
Wow. But you're looking at 500 miles?
500 miles, man. And look at this. This is what I was saying. All the materials left over from the car that they don't use, they build rugs, they do furniture, they build mattresses, Larry. I mean, look at this. They build clothes, they build travel equipment. They are already fully committed to renewable energy, Larry. And those tech people are saying, whoever can make things renewable in the energy space is going to become the world's first trillionaire. Right now, Elon is leading, but NIO, Larry, when they go worldwide, I can see them catching up with market share in Tesla pretty quick.
That's just wow. That's pretty amazing. I want to know though, do they have any plans to penetrate the U.S. markets?
Yes, they do, but they and this is the little. Can you see that, Larry? That's what you would pull into, and it would jack you up and change your battery, and then you're on your way.
That's nice.
And then they also have, for a subscription fee, you can get this van over here in the corner will find you wherever you're at. If you're in the vicinity of where that van can go, and it'll charge up your car. I mean, Larry, they thinking about this thing, man. They thinking about this thing. They really got it. Oh, here we go. Maybe I can play this clip. Let's see if it'll do it. Here we go.
Is there sound to it?
Yeah, let me see.
I think when you share the page, you have to share the audio too. That is pretty slick. Yeah, I see what they're doing.
Yeah, man. That's
and that whole process only takes what, 2 minutes, you said?
Two almost 3 minutes. That's unbelievable.
That's incredible.
That is unbelievable. And you get a new battery.
Yeah, that's going to cause some people to have to change the way they look at designing their electric vehicles.
You better believe it. You better believe it. Look at that. Look at that.
Yeah, that's slick.
Larry.
That is really slick.
Unbelievable. And you out the door.
You know, the thing is 500 miles. 500 miles is like that. For a lot of people, I think that's that sweet spot, because for most people, most gas cars, I think they say they get an average of like 400 miles to a tank.
Right.
And so I think for most people, if you're on a road trip, having a And assuming that they ever sort of standardize the whole charging thing, so regardless of what vehicle you have, you can get charged up.
Mm-hmm.
500 miles is fine, because I think if you drive and you get to a place where you're like at a quarter of a charge or something like that, you just pull over. A lot of people, if they're on a long road trip, they'll stop and they'll shake their legs, get something to eat. And that's usually enough time for them to get their vehicle charged up. Because you said the supercharger thing takes you to what? You get to up to like 80, 90% or something like that in like 20 minutes.
On my car,
after that.
On my car, but I've got a 50 kilowatt battery, so I only get 235 miles. So and I'm on the V2 charger that Tesla offers. So from let's say I'm at 7% energy, it gets me pretty much to about 75 to 80, literally in about 20 minutes. And that's fine for me. But, if you're going a super long trip, that can be tedious. It can get tedious. But look at this thing right here, Larry. They've got the pull-up van system. And it's in 10 minutes, you're getting 100 kilometers of range in 10 minutes with this van service.
That's what, about 50 miles?
I would have to do the conversion, but it's something somewhere around that area. But I mean, to just know that a van can pull up and charge your car, that's something Tesla didn't think about. And maybe Tesla feels like the way they're transitioning themselves, they don't need to do that. But I mean, NIO's got this thing. It's exciting, Larry, and more institutional investors are going to be jumping on this, not because it's a car company, but because of the technology that they are putting out here that's going to change the world either way you look at it.
Yeah, I think we're moving away from just the traditional car companies to really, like you said, there's tech companies that make cars.
You got it. You got it, my man. And then the last thing I'll show you, and I'll jump out of this, is NIO for your home, man. I mean, Larry, they're diverse. They've got their hands in a couple of areas, and they all stem, Larry, from new technology. I mean, now see, I knew this when I told y'all to buy the company last year. I already knew about this stuff, Larry. And like I said, whenever I'm telling people, whenever I make investment recommendations, before I make those recommendations, I check their balance sheet, I check their income, I check to see how diverse the company is to make sure they have what you call a wide economic moat. Basically, the moat means what makes them different from somebody else. If they're wide, they've got different things that they zero in on that other people aren't doing well. If it's a narrow, it means that you're pretty much Walmart. You can go set up a pop shop store and sell stuff. That's what Walmart does.
Right.
But I saw all this stuff with NIO, and you all that listened to us and got the stock last year, you saw how you got rewarded by institutional investors, us retail investors, and hedge fund investors. Hedge funds love NIO, Larry. They're in love with NIO. But I'm going to tell you somebody else they're in love with, Larry, that makes NIO more bankable. NVIDIA. They love NVIDIA.
I don't own any NVIDIA.
I don't either, but I have done puts on NVIDIA. I have done short calls on NVIDIA, and I've won every single time. Because I show you, I think I showed you one day I had a put on NVIDIA, and I was worried it was going to go down. It went down for a day, then went right back up.
Yeah. NVIDIA's, I see why I don't own it. Because
yeah. Ladies and gentlemen, Larry don't like to play in the playground once he get over $400. He don't like to mess around like that. Larry like to stay under $10 with his stocks.
I mean, you're not wrong. I like to buy some cheap ones, partly because I don't have $200,000 in the market like you. So I like to be able to, at some point, I like to be able to buy full blocks of stuff. But for instance, I like the NIO. When I bought NIO, I bought it at 888, and it's at 58 now. I wish I would have been. I mean, if I had known, I should have just bought a full block of it, and I would have been very, very happy right now.
I mean, man, look, you got to stop thinking like that. Just because you can't buy 100, don't mean you still can't make gains with buying 10. It's
No,
the
I did. I
percentage.
bought some, but I sold some too. But I think I might pick up a few more shares. I was thinking maybe about buying 10 shares tomorrow and just hold and see what happens to them. So
Well, Larry, why don't you just buy a call? Let me get in here and show you on my Robinhood screen what you can do with a call. Because I went through a call with people in the last video, and I'm gonna show you what a call could possibly look like on NEO. So let's just say you want to control 100 shares of NEO, right?
okay.
Well, before I even do that, let me show you an example of how it works, just so you have an understanding of the potential. So I bought this call, which is Applied Materials. I didn't want to own the company, but I believe that because we've got Joe Biden and what they do with Applied Materials, that I thought the stock was going to go up. Okay, so you see right here, it says AMAT. I bought a call at $88.50, right?
Okay.
And you see the stock is at $95.50 right now. So it went up. What's that like? That's $8, right? That's $7. It went up $7. Okay. You scroll
What's that
down.
850 on there?
850 to 950. 88.50
Right.
to 950. 95.50.
I know, but what is it? Where it says $8.50? What is that?
That's talking about the gain.
Okay.
So when you scroll down here, it cost me $385 to get the call. And I bought the call a week ago, and my expiration date is the end of January. Okay. My total return on my contract is $465. The market value of this contract right now, Larry, is $850. And the stock only went up $7. So it cost me $385, and I've already made $465. Could get out right now and take that money if I wanted to. Could get out right now because I made a call on a pretty high dollar stock. So NEO is probably going to be cheaper to buy than this. And you see, I bought a long call. I bought it till the end of this month. So let's jump in here and see what it would cost you to buy NEO. We know NEO is definitely going to go up. It's going up. It's just a matter of how high it's going to go up. And what you want to do is capture some of those gains, and this won't risk losing your shares or anything like that. So you go in here to trade NEO, and we went in here and we looked at it a few minutes ago. So you could buy a call, Larry, that ends on this Friday.
Okay.
And it's looking like if you buy that call, it's probably going to cost you about $300 because, this is going to change tomorrow because of the time decay. It's not going to be $400 tomorrow. So let's just click on this one right above the share price, which is $59.06. This one's $59.50. It's going above that probably before the market opens. But if you was to buy that call, they're saying it's going to cost you $400. If this thing goes up, Larry, let's just say it goes up $5. You're going to multiply. You're probably going to be able to multiply that by this number down here, and it's going to be just like my AMAT. Just like my AMAT. But I never recommend people buying calls for a week. If you're going to buy a call, buy at least 2 weeks to give the stock time to, if it goes down, stabilize and grow. But if not, if it gets to a price that you like, let's say the stock made $300 by the end of the week. Would you be comfortable getting out, or would you want to stay in?
I mean, I guess if I made $300, I don't know. Maybe I'll get out. Maybe. Yeah.
So I always tell people it doesn't hurt to pull a profit. When has pulling profits ever hurt your feelings? It's what I tell people. When has pulling profits?
So if I do the call, so let's say I buy a call and it ends on, let's say I buy a call, it ends in 2 weeks, right?
Right.
So what happens if at the end of that 2 weeks it's gone? Let's say the stock price goes from $60 to $100 at the end of that 2 weeks. I haven't got.
Whew, boy. If it goes from you say 60 to how much?
100.
Man, that might be like $3,000 you'll clear.
So I'm going to get the difference between whatever that 60 is and that 100 for each share.
You got to think of it like this. I was watching somebody doing this who broke it down. You think of it like you're controlling 100 shares. So think of like, 100 shares, you're getting 60% of whatever the gain is. 60 to 70% of the gain is what happens when you buy a call without having to pay for 100 shares of said stock.
Now, what happens if it goes down? I just lose my money, right?
You just lose your money, but that's the most you can lose.
So if I buy a call and the call costs me $300, but then it goes up, I get the gains. But if it goes down, I lose my money altogether. Whereas when you do a put,
yeah,
if I sell a put and the price goes in the opposite direction that I'm looking for it to go to, then I actually own the stock.
Yeah, exactly.
But then I have to make sure to put up so now when you're doing a call, like when I know, like when I sell a put, like if I was going to sell a put, let's say, let's just say GE or something, yeah, let's just say GE, which I think is at like $10 a share or something like that, or $11. Well, let's just say it's $10 a share. And I sell a put on GE. I'll have to put up $1,000. I'll have to have $1,000 to put up for those 100 shares at $10.
Yep.
Now, if I was to do a call on a stock that's like NEO, which is at $58 a share, do I need to put up the $5,800?
Oh yeah. You mean when you're buying a call or when you're selling a put?
Buying a call.
No. No. All you got to put up is that premium price. That's it. That's why so many people do it, Larry. That's why I started doing it, because sometimes I don't want to give up $26,000-$30,000 on some of these stocks I'll be messing with, but I want to capture the gain. So think of buying a call as the same modality as selling a put, because both of them you're betting that the stock is going to go up. It's the only catch, Larry, is this: when you sell a put, you have 3 ways you can gain, versus when you sell a call. When you buy a call, the only way you gain is if the stock goes up. But when you sell a put, the stock can stay where it's at. It can go up. It can come down a little bit. You're still going to get paid. And in the very worst case scenario, if it comes down below the strike price you took, you own the shares and you just sit on them, and then you do sell calls and make money that way until it goes back to the price you had it. Both of them are bull strategies. It's just that one of them gives you more exit strategies versus buying a call. You only have one exit strategy, and that's the stock has to go up or you just lose the money you put in.
Now, if I buy a call, right? Let's say I buy a call and I set the date to a month from now.
Yep.
Do I have to wait out that whole month, or can I get out early?
No, that's what I was saying with AMAT. You can get out tomorrow. You can get out whenever you want to, or you can exercise and buy the shares. It's up to you. You can do whatever you want to do. So I guess that's another benefit. That's another benefit to buying a call, is that you buy the call at whatever strike price you pick. And let's just say the stock has just done zoomed up to, $100 from what you said is a strike price. You can then exercise the call, doesn't cost you anything, and then take those shares and then sell them.
So if I was to say, so let's just say that, let's say I bought a call on a stock that was $100 a share, and then I set it for a month. And in 2 weeks, the price of that stock doubles and it goes to $200 a share. I can exercise my right to buy it and buy the shares at what price? The strike price would be what?
The strike price, the $100 strike price you paid for.
Okay, so I would exercise my right to buy it at the $100 strike price.
Yep.
Even if I'm 2 weeks in and the price is at $200, I would buy those shares at $100.
That's exactly what you would do. That's exactly what you would do if you want it. Yep. Then you turn around and sell it. So that's what I do.
So that money would just come out of my brokerage account, or the money to buy those shares will come out of my profits, or how does that work?
Well, I mean, it doesn't come out of anything. You've already paid the premium to control those shares. You're paying that up front.
Right. Okay.
I mean, once you pay that premium, Just think of the premium as the price to open the door. That's
right,
it.
but the premium. Well, so let's say that I buy. There's a stock price that's $100, and I buy, and I control 100 shares of it. That would be the equivalent of $10,000. But if the premium if the cost of the call is only like, let's say, $500, that's not enough to pay for all of it.
I don't think I really understand what you're saying. So
yeah, I don't understand it either. I'm just trying. So I guess I'm trying to understand how the part works where you would exercise your right to buy it. That's what I'm trying to understand that part of it.
Okay, repeat that again. I think I might can break it down for you.
Yeah, just explain to me how the part works. If you were like, if I bought a stock and say like $100 and it doubles, goes to 200, and I decide I want to keep this stock and hold it.
Mm-hmm.
What does the process look like for me doing that?
All right, let's go into one of my calls. I think that'll make it easier. Let's go in here to AMAT. All right. Can you see my screen?
I can.
Okay. So in order for me to get AMAT at $88.50, I had to pay $385. All right.
Okay.
So I could exercise this stock and own it right now. And I've lost the $385. But the thing is, my break-even price on the shares is $92.35, which is already past that. So in essence, because of the premium I paid, they're adding the premium I paid into what would make me whole, which is $92.35. Do you understand that?
So how much more do you have to come out of pocket then to get it?
Nothing. No, I don't have to come out of pocket anything. If I exercise right now, nothing changes other than I'm above this number that's 92.35. So what they're basically telling me is, if I wanted to exercise my call and take this 100 shares, I don't come out of pocket with anything else. Oh, you're saying to buy the shares. So to buy the shares, I'd just be paying the difference minus the 385. So basically, it's the inverse of a put. I get what you're saying now. It's because when you buy a put and you get paid that premium up front, you
Right.
eventually have to divide that out to what is your break even if you got stuck with the shares. So you basically, if the stock goes down, you would add in that premium to those stocks and divide it into 100, which would then give you the stocks basically at a discount, quote unquote. So basically what you would do with this is, whatever the price of the stock is when you take control of it, you paid $88, and with AMAT, it'd be $88.50. So you would just basically add in the price. Oops, why do I keep doing that? All right, can you see the screen?
No, not right now.
Okay, here we go. Let me get it back up in there. I think I figured out what you were saying. Okay, so basically what you wind up doing is you would need the difference of what it's going to cost those shares minus your 385 to actually control those 100 shares.
Okay.
That's how that works. So it's a powerful tool, man, but I don't know too many people who actually exercise the stock. Really, when people do this, they don't care about holding the stock. They just want to trade it. So they just do pretty much what I'm doing right here, which is just control the contract. And as the stock goes up, they pick a point in which they want to get out. Like, I'm actually thinking about getting out. When this hits 500, I think I'm getting out because I'm fine with $500. So that's what most people do. Hardly anybody exercises their contract.
And when the contract expires, it automatically just bumps you out and pays you out. Is that correct?
Yes. Well, if it's up, yes. If it's down, you've already
your money.
Yeah, that's it. You got it.
This part of it seems like straight up gambling.
It absolutely is straight up gambling. Absolutely. Okay. Absolutely. That's exactly what this is, straight up. You better have insider information. You better know your company. You better know that the info that you got in terms of maybe a partnership or a deal or a marketplace indicates you have to know that is going to happen.
Okay.
Yep.
Now, how far out can you buy contracts?
Oh, years. It just depends on the stock. So let me show you another one I got in here. One that I told you I didn't want to own, but I thought it would go up. So down here, I bought a Ford. I bought a Ford contract, Larry, and look how far it goes out. Next year on the 21st.
Next
And
year
look
on the
what
21st.
it cost me $247, and I'm already up 21 bucks. And it's more than what's this? We've got it's 375 days it has to grow.
Okay. And your break-even price is 947.
947.
And your
And
average cost per share is 247. Okay.
Yeah, and right now the stock is at $8.97. And where do I think this stock is going to end up before next year? I can easily see this stock, Larry, because of all this effort they're putting behind the Bronco. And the Mustang drops this year. This stock, Larry, is going to be $15.
Okay.
It's going to be 15, if not more. And so because I don't want to own Ford, I just bought a very long call. So yeah, my call goes all the way to next year.
And that cost you $247.
Yep. And my contract is worth $268 right now. If I didn't do anything else, I could get out right now, and I've gained $21.
Okay.
So that's why people buy contracts. But when you buy a contract, it's
now,
best.
How do you get out?
Simple. You see up here where it says sell to close. You go in there, sell to close, type in
one contract. Okay.
Yep. You review it and submit, and you're out of it. You're out of it.
Well, hit cancel since you're not trying to get out.
No. I ain't trying to get out no time soon. I'm going to ride that bad boy till the wheels fall off of it.
Well, that does seem like if you believe in the companies, if you believe the stock price is going to go up, it does seem like it makes more sense. So I'm assuming the longer the contract, the more it costs.
You better believe it. Would you like to see an example? Because here's one that even I don't really want to blow the money to do. Let's just take Amazon, for example. And everybody knows Amazon is going up. Can we not say that Amazon is not going to go up, Larry, between now and the end of the year? Do you think Amazon is going to go up?
I'm going to assume so.
The buy
indications that is not.
Look at the buy rating is 94%.
Yeah,
that's our buy rating. So you come in here and you want to trade Amazon. And you remember my whole existence in the stock market is so that I can sell puts on Amazon, Booking Holdings, stocks like that.
Okay.
Larry, just to buy a call for Friday is $4,088. Someone selling a put would get paid, or someone buying this contract would have to pay. Just for the week.
So buying a call is going to cost you $4,000. How much? $4,800.
$4,888, and that's just for this week. Let's say you want to stretch this thing out. How far you want me to go? January next year?
No. Let's look at the week. So if you buy a call for the week,
okay,
you would get the amount that. If it goes up, you get the difference between what is it? What's your strike price at?
That strike price would be $31.80. So
so you would need 32.28 to break even, and anything over 32.28, you're in profit.
Pretty much. Yep.
Okay.
Yeah. And okay, so let's just say we look at, because remember, I'm telling you the best strategy for buying calls, even though selling a put and buying a call are both bull strategies. Both of them mean you think the stock is going up. The manner in which you handle both is totally different. So when you buy in a call, you want to buy the thing long unless you got insider information. So let's just say you believe in Amazon, which I think everybody does. Let's just say we look at a call to September. You're going to control 100 shares of Amazon till September, and you want to just buy it right above. You want to buy right above the share price right now, which would be this. You've got to have $380,000 to buy that.
Oh, I see. Yeah, because the price went all the way up to $380 to.
Yes. And you know what, Larry? Somebody in December spent $6 or $7 million to buy a contract on Amazon that expires in December this year coming up. That dude about to be rich. He about to be rich.
All right, let's go to let's look at one of my companies that I own, and let's see what that's going to look like for me.
Okay, which one you want?
All right, let's check out. I'm gonna have you check out two of them.
Okay.
The first one, or three if you dare.
I dare.
All right, the first one. Let's check out Disney.
I love it. I have significant holdings in Disney. I'm a lover of Disney. My daughter is going to be a lover of Disney. Okay, what you want to know about Disney?
All right, let's see what a call will be for, say, let's say a month.
Okay, so you want to check a call from now to, let's say, February 12th. That work?
Yeah, that works.
Okay, February 12th. You want to control, because of the way they've been fluctuating, I would, instead of going above the stock, I would go down. So it's going to cost you $200 more. But if you really think it's going to go higher, you're always supposed to pick this number right here, just above it. So 180. You're going to have to pay $688 to control it for a month. And you probably will win on that.
Okay.
You probably
so
will
if
definitely
I did $688, so if the stock price goes to 186, then I'd break even.
Yes, absolutely.
Okay.
And anything above that is all cash in your pocket.
So that's the break even point. Anything above that's cash in my pocket. All right. The other one I want to look at is American Airlines.
Oh my God.
I know. Let's look at AAL.
Now, and for you, this is probably going to be the best way for you to go instead of buying up all these stocks. But anytime, man, look, whenever you about to buy a call, check the last week to see what was going on, and look at what they did last week. And then
they've been going down a little bit. I see.
Yeah, and then if you're going to buy it for a month, they ain't done nothing. But you can also buy a put too, Larry. So if you think the stock is going to go down, you can also buy a put. You can buy a put. But let's just look at it. So for definitely on this stock, you want to do a long call. You don't want to do nothing short. I just tell you that right now. So you want to look at this thing, at the very least, you want to go till July 16th. It'll cost you $200.62 to buy a strike of $16, meaning you think the stock is going to hit $18.62 or better. I mean, that ain't bad, honestly. To be honest with you, that ain't too bad.
Yeah, that's a little bit though, man. 1862 in July. I'm not sure about that.
I ain't either. I mean, I ain't either, to be honest with you. I don't have no love for American Airlines. I got love for
Let me ask you one more, and then before we go to before you can explain to me about buying a put right quick. So let's check out where'd it go? Riot.
Ooh. I'm the one that turned the world on to Riot, and I've been selling calls on Riot. So now Riot has been on a tear. As long as cryptocurrency keep going up, Riot keeps going up. Last week they made $10 basically, and in a month it's made 19. And if you believe Riot is going to go up, right now it would cost you $300 to get a strike to break even at 32, and that's just for this week. And I'm telling you, you don't want to do it in a week. You want to go longer than that. So let's say you just want to do it for a month. Let's say you want to do one of the things I do, Larry, strategy I do. I pick 4 stocks. I read the information of what's going on with them, and I pick 4 or 5, and I buy a call for a month, and that's going to be my monthly income. So let's just say you're going to pick this thing. Let's say you just want to be in this to the end of the month. Okay. You would have to go to the 30 strike price, which would cost you $478, and your break even is $34.78.
Yikes.
Yeah, man.
I don't know about that. That seems like, I mean, that's a big jump.
But look at how much it's jumped. Look at how much it's jumped in the last month.
Yeah.
I mean, if you're going to do this type of strategy, definitely ride the momentum. If the stock has been on a tear and the RSI and those other numbers look good, that's called an educated hypothesis and not a gamble. But if you just wake up, you hear in the news, NEO, blah, 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 and then that's a gamble. Be able to look at the RSI, make sure it's not signaling overbought. Then you want to make sure you check that they've got good fundamentals, which NEO, for the most part, their fundamentals are okay. And then you want to check the implied volatility. And you don't want implied volatility to be high. So let's see what their implied volatility is. Oh, hell no. Oh, hell no. No. That is just way too high. When
where do you want it at?
Remember, you want to see it 75 or lower.
Okay.
Now, of course,
so that's a no-go.
Volatility really depends on the stock, but the less volatile the stock is, the less you have people getting in and out of it, so you don't get that thing they call IV crush, which is it's moving and people moving the stock around right now, and then you wake up tomorrow, the price doesn't drop because people have stopped moving in and out of the stock. So no, don't even touch it. Don't even think about it.
Now you talked about buying a put versus a call. What is that going to do?
I mean, when you buy a put, you're betting that the stock is going to go down. So a lot of cats do what I just said. When they see that IV is this high, they buy a put, and as the stock goes down, you see what the break even is for this. If you was to buy this put, the break even is $21. So you're betting the stock is going to go down below $21. Is what you're betting.
Okay.
So the strike price is 30. Your break even was 21. You're betting that this stock is going to tank. So let me give you an example of when people use this and it almost got them in trouble. Do you remember the two airlines that crashed into the World Trade buildings?
No.
One of them was American Airlines. Well, Larry, somebody in Dubai bought $20 million worth of puts on American Airlines that lasted 3 months. Before they crashed, the day before the planes crashed into the towers. Now, that was some insider work, right?
Yeah.
And the FBI jumped on it. They never could figure out, they could trace the account, but they couldn't figure out how the money got dispersed. But long story short, somebody made them a whole lot of money because after that, we shut down airplanes. People were scared to travel. The stock tanked, Larry. It tanked. Right. And them people ran away with a lot of money. That's it, man. That's it. I mean, obviously, my brother, the best strategy is still to sell puts and sell calls because you've got more of an escape vehicle to get out of the stock. But if you just dead set on something that is guaranteed, there's a handful of stocks you can always bet is going to go up. Your Amazons, your Walmarts, your Costcos, those stocks are going to always be going up. Target, CRISPR Therapeutics, ARC ETF, those are stocks that are going to always be going up unless we have another lockdown pandemic situation like that. So those would be the kind of stocks you bet long on if you don't want to own them. But if you want to own them, you just buy shares.
Right.
So that's it, man. So, and to finish off my game plan before we get out of here, Larry, tomorrow.
Go over one more thing with me right quick. Go over like if I wanted to buy, or I guess it would be selling a put. If I wanted to sell a put on a company, right? That's what you had explained to me before. So let's go back over that one more time.
Okay.
So let's say I want to sell a put on BlackBerry.
Ew. So the first thing that should be coming in your mind is you think BlackBerry is going to, at the very least, stay at this price or go up in the next week, correct?
Okay.
I'm asking you, is that what you're thinking?
Yeah.
Okay, so that's a bullish move. So you go in here, you check the trade. Well, before you do all that, in the first, let me go back. Before you do all that, you always check down here. What did it do in the last week? It went up 89 cents. What did it do in the last month? It lost 86 cents. So you're only netting in the last month 3 cents. And in 3 months, it's made some money. Okay, so I can live with that. That's close historical data. Go in here, check out the stock, and you're going to click sell a put for January 15th, which is Friday. And then you would just come down in here and just pick one of these strike prices you're comfortable with. But here's the thing, you're not getting paid anything. You're going to get paid, if you pick the strike, which is $7.50 just below, you're going to get paid $32 for having to cough up $7.50. And let's check the numbers. That volatility is a little higher than I like it. Mixed with a delta being higher than I like it, I wouldn't do that at all. Not that one.
What do you want the delta at?
I would like to see the delta no higher than 39.
Okay.
So you could definitely go at that delta. It's 22. Volatility is the same, and I would be fine with that. So you would have to put up $700 to earn $12.
Yeah, that doesn't seem like enough.
No, it's not. I told you got to get out of these. You at least got to be in the stock that's $15 plus to kind of be in the sweet
All right,
spot.
so let's look at fuel then. Fuel cell. Let's look at them. I think they're at 16 now.
Oh yeah. Oh, I like them. Oh yeah. And the thing I think the issue with fuel cell is they don't do
Weekly
they don't
puts. I think they only do monthly.
Yeah, I think they only do month. Because wasn't that the issue we had with what was the one that we should have jumped on? Blink charging. You remember that? We looked at Blink when it was like $8, Larry. Now Blink charging is like almost 50.
Yeah, it's 43. I bought shares at $5.64. So
good God almighty. So yeah, fuel cell only does it once a month. So you could do it this week and actually technically be in and out in a week. But if you believe in fuel cell and you want to get a quote unquote discount, you could drop right down to the one below for $15. That is a high volatility, man. That's a high volatility. But just because
that's buying a call, right? That would means I would control 100 shares, right?
Let me see here. Yeah, don't forget to click that sell or put. But I mean, it's basically the same thing. The premium is the same, basically. Except for in selling a put, you're the one earning the premium and hoping that your stock stays 1539 or better. And the person that would be buying that premium is hoping that the stock goes higher and higher and higher.
So if I sell a put, I'm only gonna make I would make what, $125?
$125 for putting up 1,500. Now that's decent.
That's not bad. That would be through the end of the week.
Right. That's about 10%. You could do something with that. And here's the thing: Robinhood got it now where you can wait and you can do calls. You can do calls the day of expiration.
Oh, really?
Yeah. Now that really is not going to be workable for something like fuel cell, because by the time you have time decay, this 125 is probably going to be like $15 if you wait and do it on Friday.
Right.
But this does work for stuff like Amazon, Tesla, any stock that's like $500 plus. If you got that money sitting in the bank and you don't want to be worried about your money all week long, just get in there Friday at noon. You only got 4 hours to the market close. See how the market has done throughout the day on Friday, and maybe around noon to 1 o'clock, sell or put on any of those high dollar stocks, and make sure you give yourself at least $100 worth of room, because ain't nothing going to move $100 in 4 hours unless we have some marketplace disaster or some marketplace gain. And that's what I'm gonna start doing, Larry. I'm gonna start waiting.
You do that, and that way your money's not tied up all that much. But it's still, if you're selling a put, in the event that you lose, you own the shares.
You own the shares. But
so you're not really out anything. You just own the shares, and now you have to wait until the stock price goes back up before you sell it.
And or you can just go ahead and start selling calls while you wait for the price to go back up.
Now you sell a call when you own 100 shares or more, right?
Exactly.
Now, how does that look on here?
Well, let's go to mine because I'm about to do Tesla. tomorrow.
Okay.
So on my Tesla call, let me go in here. I don't even have to check this. I know that one like the back of my hand. And I would click, and I'm not going to sell it on Monday. So if that's what you're thinking, you can forget that. I'm selling it on Friday because Tesla is one of these stocks. It'll jump $100 in 2 days.
Right.
So if you sell a call, so if I was willing to give up my shares at 170, I would make $4,300. But there's
870, you mean?
Yeah, 870. I'd be willing. I get $4,300. But if I
What's
want
the price of the shares?
Yep.
Okay.
Yep. Plus the difference in what you've already made on the shares. But I wouldn't on a Monday, I wouldn't do that low of a price. I would do, if it's 860 now, I'm definitely going to go 980. That's what I would do, something like this. And when you click on it, volatility is a little higher, but that doesn't scare me. 87 doesn't scare me with a 20 delta. 20 delta, and I picked a number that's $100 more than my share cost already. And then I would get $1,100 to boot for having
for a single day.
No, it ain't going to be this price on Friday. No.
Okay.
Friday, this number is probably going to be more like $100. But I mean, I'm fine with that. I'm fine with that. But by the time
basically, when you're selling a call, you want to pick a price that is higher than what you think it's gonna go to that week.
Right, on expiration.
Right, you want to sell. So expiration. You want to pick a price that's higher than what you think it's actually going to make it to on expiration. So
right.
that would mean that the price would have to move up almost it's at 867 now, so it would have to move over $100.
100 and some change. You're talking about $113 in a week, or whenever I would do it.
Right.
Or man, honestly, you could, if you've already made your money on the stock, like let's just say, because I'm well in the gain on Tesla. You could just pick a price that you'll be comfortable with losing the stock plus making the premium if you don't want to hold it long term. And then on top of that, Larry, you could always, if you bought this and got paid the premium and you worry that it's getting too close to your strike price, you can always buy your way out.
How's that?
All you would do is, and I don't have one that's running right now, but you remember how I showed you can sell the close with one of these other options?
Right.
What you would do is you would buy to close. It would say buy to close. And then you can get out of your stock. And it's not going to cost, it's usually, depending upon how much it's gone up, it might cost you it just depends on how much it's run up. It'll probably cost you the premium they paid you, plus maybe, I'm going to say 2 to 5% or more. That's how it usually runs.
Okay.
So like if you're someone and all of a sudden good news just hits the stock that you wasn't expecting to hit it, and you don't want to lose it, and you want to keep it because you believe you've got more value in the stock long term than just a gain for a week, always just buy to close your call option.
All right, I like it. I think what I want to do is let's see. Let me open up my Robinhood and let me search for, I think I want to go with Fuel Cell.
You're going to try to mess around with Fuel Cell.
Fuel Cell Energy, 539. Let's go. Let's see. Let's go trade options. And it was January 15th. And if I want to buy a call, let's see. Now, where were you at? Let's see. So buy a call. Which one were you thinking about before getting?
Fuel Cell?
Or whatever.
Are you going to sell a put, or are you buying a call?
Let's see. Let's say if I buy a call.
And you're going to buy a call on Fuel Cell.
Yeah, let's say I think it's going to go up.
Okay.
No. Let's do a put. Let's do a put because that way I get to keep this. So I'm going to sell a put.
Sell a put.
And
you want it to expire this month or next? You definitely want your money back by this Friday, right?
yeah, this Friday, the 15th. Yeah.
Okay. How good are you feeling about Fuel Cell? It's been on a tear. Do you think it's gonna do you think it's gonna do you think it's gonna go below the 1539 that it's sitting at right now?
No.
Then I would still be safe, and I would buy the $14. I would sell the put at $14.
At 14.
Your volatility is high, and your delta is 30.
Wait, where's the $14? I see. Oh, I see. Okay.
And you would make $79 off of 1400.
And my break even is 1321.
Yep.
Now let's do more. Let's go with the 15 put.
Okay, my man feeling froggy. Let's see. Delta is 41. That's not bad. The IV is pretty high, but these type of stocks have just been in the news. And with NEO, Larry, honestly, you might have a good shot because when anything good happens to the renewables, all of them seem to be up. If you've noticed the trend.
How do you can't see all this extra info on the app, can you?
I'm looking. I don't know. I don't think you can. Yeah, you can see it on the app. You just have to tap on it.
Like when I tap on it, I'm seeing it's asking me how many contracts and stuff, but I don't see all the other info.
I'm because I don't have my phone near me. I can't help you out on that. I'm looking at it. I'm looking at it from the computer view, and on the computer view, the delta is 41. Your IV is 168, but you're going to make $125 by Friday. And if you get stuck with the stock, your break even is 1375. I mean, I don't think that's bad, honestly.
So as long as it doesn't go below 1375, I'm good.
No, as long as it doesn't go below $15. The 1375 break even is if you got stuck with the stock. They're adding in the money, the $125 premium that they paid you into the 100 shares and dividing it out. So then your break even thus would be $13.75.
Right, that's what I mean. So as long as the price doesn't go below 1375, I'm good. I'm not out anything.
Exactly. And I
own the shares, but if it goes, okay, I see what you're saying. Okay.
Yep.
I don't want to go there, but I'm just in worst case scenario, if it drops down to like 1375, I haven't lost any money. I just lose. I'm just own the stock. It's just as if I had bought the stock and
right. And then investors, you can look at it, you own it kind of on a discount if you want to look at it like that. And because now you can turn around and Larry, you can sell a long call on this stock and probably make $400, which would put you in a better position.
All right.
I actually like this one, to be honest with you.
I'm going to do it 15. So at the $15 strike price, break even is 1375. I'm going to go ahead with one contract.
Oh, it ain't going to let you do it tonight because
it won't?
You can try, but it might not submit. But you can try to put it in there. I don't know if it's going to submit it tonight or not. Because you got to remember, it's going to submit the price that happens at 9:30 a.m. And if this stock goes up or down, it's going to change. It's going to change your premium. It's going to change all the other numbers that you see in here. So I tell people just wait till Monday morning.
Oh, really? Okay. Well, how do I cancel my order then?
You already did it?
Yeah. How do I cancel it?
Just go in. You can go in there and cancel.
Okay, we'll do that. Okay, you can do that here. View order, and let's see. Option order queued, type sell, position open. Let's see, replace order. We cancel it right after you'll be able to resubmit. Okay, continue. Okay, all right. I guess it looks like I canceled it.
Okay, yeah, just wait till tomorrow.
Okay. Yep. Sounds good. So I'll wait till tomorrow. So tomorrow morning I'll get up, I'll do it, and then I'll have that go until Friday. We'll see what that looks like. So
Yeah, man. So everybody out there, I want to thank you all for coming back for the second part of this thing with the big homie, the living legend, Larry. We up here trying to teach you guys how to get them life gains. I will do the best I can to be consistent about the Monday morning stock game plan. I'll come up here on Sundays. It'll only take 30 minutes. I have everything ready. I'll let you guys know what was the biggest news of the weekend to get you guys prepared for the week to come. And that's going to do it for this video. Don't forget to like the video, comment, subscribe, get yourself that life gain. Hit me and Larry up on Instagram, all my other stock folks out there, to let us know what areas of the stock market you're looking at so that we can research this thing together and make these life gains as a team. And until that next Sexy as Hell video, which will be tomorrow night, we'll see you.
Peace.